Welcome to Dividend Talk, episode 288, Investing in Asia, and an interview with Florian. So, hey Derek, if you're listening, enjoy your free evening this time. I hope you made it a date night with your lovely wife. I know how much she enjoys those evenings. But if you're listening to this episode of Dividend Talk, which is all about investing in Asia, I have a special guest with me today, and that's Florian. Florian, nice to have you on. Thank you for joining.
Yeah, thanks for having me. Really looking forward to our discussion and a big burden to replace your co-host here for today.
Well, we go from Ireland, which is a little bit to the west on me, more to the east on me. But Florian, it's really nice for you to join. And we met each other in Malmo in this lovely Dividend Talk meetup that we had with, I think, nearly 30 people. And we got really to talk a lot about Asia. And it's very interesting because for the first time, we kind of felt like, okay, we now have someone that actually understands this stuff a little bit and the perspective of investing in Asia, because that's really a big, I would call the weak spot from Derek and myself. And we got over time, we got a lot of questions about this, like investing in Singapore, China, and such. And it's not my circle of competence. So I'm really excited to have you on with this one. But before we get started, Florian, could you introduce yourself a little bit to our community for the ones that were not joining us in Malmo?
Yeah, sure. Yeah, my name is Florian. I'm 45. I'm German, actually, married, have a 9-year-old son. And actually, I moved to China 15 years ago. And ever since staying in Asia, in China, but also in Malaysia, a lot of time in India. I also had some time in US, but most of the time in Asia and China. I'm an engineer and started to build machines in China for a German company. Later pivoted into the factory automation and software business, founded a company there, also started a venture capital fund, and in the last 8 years built up an automation company together with a team, which was acquired last year. So since that, I'm actually focusing on my investments, basically full time, doing beside that some strategy advising for European companies how to play Asia. And also beside that, running a business association as a chairman for European companies in China, and do some startup mentoring, a little bit education, so it's not boring right now.
Congratulations on the business sale and having effectively, I call it financial freedom, right, Florian, if I say it right, and the fact that you can do so many side hustles now. I see on your face already that and I saw that also in Malmo, that it brings you a lot of joy.
Yeah, I actually started to make a retirement plan 15 years ago because as a foreigner, I'm not in a social system, so I need to do everything myself. I made a plan, I broke it down, and my retirement is supposed to be when I'm 55. And the acquisition came earlier than expected, so now I'm 10 years early with that. So it was a surprise, but finally a positive surprise. Yeah.
It sounds actually like we could do in the future another episode on this, like how to retire via, for instance, business ownership, right? We actually never spoke about that as well. And if you look at the statistics, actually, many people become millionaires and such because of the ownership of business and then the sale related to it. So that sounds already like a nice episode on its own.
Yeah, but the core remains still disciplined dividend investing.
Yes.
That's actually what I'm doing since 15 years.
Nice.
And this is also what I always try to really, especially the young guys here in
Mhm.
Asia from Europe, try to explain them that they should make an Excel sheet, put in a goal and
Yeah.
a monthly and an annual investment, and then they can just see it grow. They can understand the compound interest effect. And
Yes.
if you do that disciplined,
Yeah.
then the rest is no magic. That's just time
Math.
spent in the
Time and
market.
math.
Exactly.
Yeah. But discipline is, of course, one of the hardest parts of everything in life, because there are so many distractions in life that staying focused is hard in itself, right?
That's true, yeah.
Yeah.
And I'm finally also happy that now I need to live from my dividend, and I'm happy that I never bought some fancy cars or whatever. So I kept my money together, and that's now the basis.
Yeah.
Otherwise, would be tricky. Yeah.
Yeah, I'm sometimes thinking like I'm now kind of postponing like a fancy car in my midlife, but someday maybe my dividends will just pay me a fancy car at one point in time, right? So yeah, yeah, good. Hey,
That's true. Yeah.
before we get into the whole topic of investing in Asia, I also want to discuss a little bit of news in the week because we're recording this actually a little bit early on a Sunday evening. And today was the news that the IEA, so from the Energy Agency, the International Energy Agency countries, the member states, are going to release nearly 400 million barrels of oil from the strategic reserves. So the United States and such. This is massive. This is massive. What's all going on in Iran? And I mean, for me as an individual, I wasn't there in the 80s when there was this oil crisis. So I'm very curious what this is going to do just to the logistics and just the whole world logistics. I feel like a major disruption coming up somehow. We saw it already a bit during COVID. One time we saw it when was the Canal that was blocked by a container ship. So I'm really curious what is this is going to do to many supply chains. Do you have any view on oil and these kinds of news items?
Yeah, it's a bit of irony that we are in 2026 again having oil as really the big thing.
Yes.
After like years, everybody was talking about oil will disappear and all
Yeah.
cars will be electric and so on. So it's still super relevant.
Yeah.
And I think, yeah, all these things like strategic reserves, using them, that won't solve the problem. That will give
Mm.
us maybe 2 or 3 weeks more
Yeah.
time. But this needs really a solution. And
Yeah.
now I think it also reads whatever you can say, whatever about this war. But in the end of the day, the situation is it is as it is
Yeah.
right now, and it can only be solved together.
Yeah.
I think also between Asia and the West. So
Yeah.
let's see.
Yeah.
I think there will be a solution maybe in 3, 4, 5 weeks.
Yeah.
Otherwise, we would really get in trouble.
Yeah, and the good thing is, because some people know that I've got quite some oil in my portfolio here, but I have also other energies like Iberdrola and such, right? So I see it a bit more also as a hedge because I'm always a bit against the oil is dead narrative. The good thing is for the people that are really into green investing and such, oil at $100 price creates a lot of innovation for alternative energy sources. Yeah, because suddenly it becomes very attractive. Oil at $40 or $50 is not helping with that. So, if anything, I hope that this leads to some new innovations that we will benefit from over time. That will be one of the nice outcomes of this.
Absolutely. And I think also it's always super interesting if something like this happens, what happens to your portfolio? So this
Exactly.
is the time where you can learn. You can
Yeah.
find your defects. And in the end of the day, it was also really, again, a super good proof. Oil, energy stocks, this is a hedge you need to have in your portfolio.
Yes.
This
Yes.
is
Yes.
also how I set up my portfolio. I have some categories in there. I just see the investments as a hedge. That
Yeah.
means they don't need to go through the roof. If everything goes well, they will not. But in
Yeah.
case there is a disruption somewhere, then you need them. And
Yeah.
with
And
the
I can.
energy stocks, you see that right now.
Yeah, exactly. We were talking briefly before the show, and the value of my portfolio effectively didn't really drop over the last few weeks. It's not just oil which went up; it's also the dollar that became a bit stronger. That pushes my portfolio also a little bit. But yeah, it's very interesting to see how this works. But okay, enough about oil. We can talk about that probably also for days. Investing in Asia, Florian. And maybe before we get started, should we define a little bit what Asia means in this context here for our podcast? Because Asia is huge. Yeah.
Yeah, that's true. And I think in the last years, I mean, I'm seeing the development in Asia now from the Asia perspective for 15 years. And the world has changed in a sense that there are new ecosystems.
Hmm.
And you could say one ecosystem is like the global West or the North, or
Yeah.
however you call it, with Europe, with US,
Yeah.
um, also Japan, Korea, maybe
Yeah.
Australia, New Zealand, that I would call it
Hmm.
the global West. And then you have the global South. And this is all around China and related to China as the center. Southeast Asia, more than 50% of Southeast Asia is actually connected directly to China.
Yeah.
You have India, you have South America, Brazil, also Mexico now.
So a bit the BRIC members.
Exactly, but it goes further. So you
Yeah.
have also Africa. Africa is also heavily supported by China companies. And also countries like Pakistan, which is also the fifth biggest country in the world. So this is an ecosystem.
Yeah.
And these countries are actually all from their needs closer to the Chinese ecosystem than to the Western ecosystem.
Yeah.
And with China becoming so much more competitive, not just only on costs, but also on innovation, actually it's more and more difficult for the Western ecosystem to serve the global South, basically from Europe, and that's a challenge, because in the past you could say you just have some Western companies, you invest in them, they will be successful in China and in the rest of the world, and you're fine. But this has changed, and this will continue to change.
Yeah. And before we go there, you just triggered my thinking, because I was once in a specific African country, let's call around the equator. And this has been 15 years ago. And I was stunned by the amount of Chinese companies that I saw. They were literally building the highways to the areas where the commodities were in the soil. And what was very interesting for me was that not the Africans were working there, but the Indians. So the Chinese were sending Indians there to build the roads and everything, and the whole supply chain and the logistics. And that was for me really a wake-up call 15 years ago. Like, hey, Europe is not here, America is not here, China is investing here for the future. And when they invest, they want something in return, like any power does. So yeah, I can kind of see what you're saying there.
Yeah. Also, if you look at the world right now, so you have the Asian countries or the global South. If you look at from a population perspective, so the biggest country is India, 1.45 billion people. Then China, 1.4 billion people. Then US, 340 million people. Then you have Indonesia, 280 million. You have Pakistan, 250 million. Brazil, 200. Nigeria, 200 plus. So all these countries are actually no Western countries. These are all the global South. And if you look at the growth, these countries grow like 5%, like in China right now, maybe 7-8%, like in India, and also in Southeast Asia, you see growth rates of 6 to 8% everywhere. If you look at Europe, you see 1%, right? If we are lucky. Also, US, you can argue how much is AI and how much is the real economy.
True.
So I see stagnation there, and all the other ecosystem. Actually, you see massive growth, and with that, it's very difficult for the Western companies to participate. And this has changed. This was not the same like 10 years ago.
And when you say this has changed, what do you mean exactly with that? What is visible here in in terms of that?
Yeah, when I came to China, actually, at that time, I came to China through accident. China didn't even exist in my world. I was in school. There was nothing about China. Also, my business was all about the world, but not about China. And then I ended up in China accidentally, and I realized, whoa, that country, the customers, they have a total different way of life. They live in huge mega cities. They have different demands. They need different products. So then I realized already that the European companies actually look to China from a very European perspective. And over the last 15 years, Chinese innovation, Chinese speed really took off. And today, you saw what happened to the automotive industry. The same is right now happening with the machine building industry. So the Chinese companies really disrupting, especially European, German players. And this was a super speed right now. And I can't see that ending somewhere. So already today, you have China from a manufacturing goods perspective. There's already a share. I think it's close to 30% right now. In some areas, even 40%. So this is right now different than it was 15 years ago.
Yeah.
And the pain is for a lot of European companies. This is like in China, it was like the flood is lifting all the boats. So you don't need to have a good strategy. You just need to be there.
Yeah.
Even if you have a very small share of this big market, you already set up well, you have your profits.
Yeah.
But now also the Chinese economy has more Chinese competition, actually even stronger now than some German players. And also the market is struggling a bit. So all of a sudden the profits for the Western companies are really gone.
Yeah. And I
And
think
this gives
Starbucks
pressure.
is struggling there, right? As an example.
It is, yes. There you have also big other Chinese chains with a different concept. This is for all companies, it's right now super difficult. And this, in the end, is also the challenge. And this is why it is so important for all investors to really look at Asia. Because what happens now is Chinese companies, their home market was big enough to grow. Now it's not big enough anymore. So they need to go somewhere else. So they need to go to the world. Now they know they are competitive. And especially like if you look at Germany, automotive industry, the margins are gone. So they need to save money. They need to reduce their capex, whatever. So they are far more happy to buy Chinese products than they did 10 years ago. So this all creates now a lot of pressure to the Western companies.
A few years ago, I've never heard of BYD, and now I see them every day on the road here. Yeah, so that's also very interesting. And for me, also sometimes it saddens me a little bit. I know we don't want to go into politics here, but it's sometimes interesting, like how perspective just changes overnight, right? Here and I'm very curious to see how the German car industry recovers from this, if they even can, right? I think at this point in time, still BMW I think is selling the most cars of Volkswagen, one of the two. But BYD wasn't even in the statistics like 3 years ago, and now poof, in there.
Yeah, but also I think, so first of all, I saw the e-mobility market from China. Actually, this was my job also the last years. So I was kind of building the roadmap for the EV cars. So that made us very successful in China actually through this trend. And if you ask somebody in Germany, this is a different perspective. You have a lot of countryside. People are a bit more conservative. If you ask them about e-mobility, say nobody needs that. But if you go to Asia, you see these cities. Like I live in a city that's a small city with 28 million people. Then other cities like Shanghai, the bigger Shanghai, they have like 70 million. So that's urban areas. There's a total different demand for cars like that. So these are the markets. And if you want to serve these markets, you can't develop a car in a Bavarian countryside in Germany for these markets if you're never there and if you're not too close. And this is what our German OEMs right now suffering from. Too much a perspective of Europe and not too much from China. And if you look now at the global market, actually Europe is just a small part of the market. So all the Asian markets right now, you see the not premium markets, the more lower end markets where traditionally Japanese, Korean car makers super strong. So they all getting challenged now from Chinese e-mobility companies. Also in North America, in Mexico, in Brazil. So this is going everywhere right now. Maybe not so much US and Europe, but the rest of the world is going into this ecosystem.
It may come, right? Sometimes this is just a matter of time.
It will come for sure,
So before we go a little bit further in those topics, like what is actually your investing strategy, Florian?
Yeah, as I mentioned, so my investment comes really from the need to build my own retirement fund because I simply have not any public retirement funds. So in Germany, I think 90% of the people would say, "Are you crazy?" But I absolutely convinced that if you can invest in something protective assets, that's the best thing you can do. So I actually built a portfolio which delivers cash flows so that I don't need to use up my funds. And I cannot get used to the idea that I need to sell something to make a living, making me dependent on some market prices. So that's why for me, this kind of strategy doesn't work.
Yeah.
Even though I also have some holdings which are not dividend paying. Actually, my biggest holding is Berkshire Hathaway, even is not paying a dividend. But overall, besides some other things like my venture capital fund, which I have some friends, there's some private equity investments. The biggest part is in dividends. And actually, since the last 1 year, I shifted part of that to bonds, investment grade bonds, because I see market prices really being high. And when the numbers get bigger, you need to get a little bit volatility out of the portfolio. So that's why I put it a bit more conservative there. And generally, I'm invested actually in ETFs. So I have not many positions, like 50% is the top 5. And 80% is my top 10. And then I have 10 more, which is a bit smaller. And I have some core investments, which are really big. But I try with some individual stocks really play some hedges. Like energy was a good example. So I have like Shell or RWE from Germany, such energy companies, just a hedge against energy costs. And I actually also have some Asia hedge for sure, because you need to be invested in Asia. I also need to be invested in Asia because I'm not sure where I will be one day. So I need to also my currencies diversify that. So I have some part in Germany, I have some part in US, and I have some part in Asia. And this Asia part is tricky, I have to say, even for me. Living in Asia, it's not easy. And I can understand that a lot of people coming with a European perspective, it's totally difficult because you don't know the region, you don't know the companies. So it takes some time, but I think there's no way around that. Later I can give you some insights, my holdings, which I have right now.
Yeah, already a few questions pop up in my mind. And the first question maybe is here, like, what is the currency that you calculate your portfolio in? Is it euro? Is it something dollar? Something else? If you all sum up everything up and you want to have one number out of it, in which currency do you manage this?
Yeah, I do a kind of a monthly report of my portfolio, also to keep my wife updated always where we are.
Happy wife,
so
happy
that,
life.
yes, and also need to have some confidence in what I'm doing. So that's important. And actually, historically, my portfolio is calculated in euro because I come from Germany. Right now, it would not make sense, actually, but I still do that. But I have to say, I have some kind of ecosystems because I have my accounts in different regions. And these accounts are really like closed portfolios. So I have a very large US dollar portion, actually. And there, for example, if I invest in bonds, I invest in US dollar bonds. So that this money stays within the ecosystem. So I don't need to worry about US dollar getting stronger or weaker because I reinvest just in the same ecosystem. So that's how I split it. A euro ecosystem, a US dollar ecosystem, and a Singapore dollar ecosystem.
Yeah, it makes sense. Actually, I'm in a Polish zloty based currency where I live and work, but I calculate my portfolio in euros. Same reason as you. Like where I come from, I still think in euros. Actually, I still think in guildens. That tells you a bit about my age. I still remember the Deutsche Mark, how much it was in guildens. So 220. Was it 220 or 110? One of the two. So yeah.
Too long away.
Yeah, I think we're from the same generation here. So if we would if you met me for the first time and you would give me a pitch, why should I or people just consider investing in Asia? I think you alluded already a little bit to it.
Yeah, I think there's two perspectives, right? One is the chance perspective, and another side is the risk perspective. So I would come maybe as a European investor, I would come right now more from the risk management perspective. So actually, can you afford to not have the biggest part of the world in your portfolio? Again, the top 10 most countries with the biggest
Yeah.
population are all basically in Asia
Yeah.
except US. So, and they are also growing far
Yeah.
faster than the rest. So there's, I think, it would be a huge risk not having an exposure there.
Yeah.
Um, at the same time, there are some countries which you can play right now through a Western portfolio. I would say
Mm-hmm.
India is one of these countries
Yeah.
because it's traditionally more orientated to the West.
Mm-hmm.
So and they also, like Germany, for example, Europe has a super good
Relationship.
standing, yes, in India. So this is like China 20 years ago. You
Yeah.
can just, for the next 10 years, you can just invest in the right company who invest in India
Yeah.
and then go with that.
Mm-hmm.
And this, I spent last year, I don't know, maybe 3 months in India.
Yeah.
I was also a general manager of our Indian company. So I know the
Mm-hmm.
market very well since 15 years. And I see the market is totally booming right now
Yeah.
since 2022, since the geopolitical shifts.
Yeah.
India really changed totally. So
Yeah.
if you go to India today, you can see the people so self-confident and really thinking, wow, the next 10 years will be the Indian next 10 years.
Yeah. Yeah.
So there's so much energy right now there. There's a lot of investments going in there
Mm-hmm.
because Western companies, they lost their traction in China. So they need to find another market, which is a billion
Yeah.
people market, which is growing fast to be able to compensate for this huge loss in
Yeah.
market share somewhere else. So they all love to see India winning.
Yeah.
So India is something you need to play, I think, over the long
Yeah.
run. Maybe not super aggressive today, but step by
Mm-hmm.
step, making the right moves there. And this
Yeah.
can be done through Western. And the rest, you need to play in Asia
Yeah.
because the Western companies won't help you. Starbucks won't help you there.
And is it because, for instance, in China, the population starts to favor more their own homegrown products instead of the Western products, maybe that they preferred, I don't know, 10, 15 years ago? Like, for instance, the brand Nike. Yeah. What is the perception of it? When you look at the sales numbers 10, 15 years ago, if you had Jordans or Nikes in China, you probably were cool. But is that still today the case?
No. So you can argue,
Mm-hmm.
but what I see, no.
Yeah.
This is so the Western brands
Mm-hmm.
definitely lost their super good reputation. Let's say like
Yeah.
that. You
Yeah.
can see even right now companies like Porsche, who was
Yeah.
like super famous, and everybody wanted to have one. Now, not
Yeah.
anymore. So
Yeah.
people buy Chinese brands and are
Mm-hmm.
very happy with that.
Yeah.
Also, in the fashion, you can see that everywhere. So
Yeah.
there's also more let's say like people are proud what China has achieved over the
Yeah.
last year decades, yeah.
Yeah.
And at the same time there's also more patriotism, I would
Mm-hmm.
say.
Yeah.
And also the economy is a little bit under pressure, so this gives
Yeah.
people to a reason to rethink what they are buying. So I see right now massive pressure of Western brands, and I
Yeah.
don't have any companies like Nike and so on
Mm-hmm.
because I just simply don't see that in future anymore. That there
Yeah.
is strong Western brands which have in the, let's say, like the global South, not only
Yeah.
China, such a strong position. I don't see
So
that
the
anymore.
China bull thesis for many big Western companies, of course, it depends a little bit per company, but generally is over. Like the 10, 15 years growth that they have experienced in China will probably not be replicated to the same extent overall.
100%. Yeah, I would see really massive pressure coming
Yeah.
forward. So if a Western company is putting big numbers of growth in China into their slides,
Yeah.
I would be really very skeptical and really dive
Yeah.
very deep how the hell they want to do that.
Yeah. And then this is interesting, right? Because we see it with many Western companies that they are missing kind of a catalyst. If you're not in the tech space with AI, um, the last 10, 15, 20 years, it was mostly global expansion, the entry into China, Asia, really, really becoming from almost nothing in their portfolios to like 1/3 of sales, right? So, and we've seen it in the numbers that in some companies actually start to decline, and yeah, I can imagine that's not easily to repair then. So, So yeah, if we talk about it, and we know that, and at least from all the investors I speak to, Asia is quite underrepresented in most portfolios. And for instance, I already mentioned it's not really my circle of competence. Derek and I often say like, "Oh, we focus on US and Europe. That's already taking a lot of our time." So this, but what do you think are the reasons why Asia is mostly underrepresented?
So before I come to that, I just want to add one more point quickly on why you need to invest in
Mm-hmm.
Asia. Because one thing what we just discussed is yes, brands are struggling to do business
Mm-hmm.
in Asia.
Yeah.
But right now, actually, also their businesses in Europe is under
Yeah.
pressure because of China, because
Mm-hmm.
China is capturing so much market share,
Yeah.
especially in the B2B area, now also machine building,
Yeah.
cars. So this reduces wealth in the
Mm-hmm.
Western developed countries,
Yeah.
which again reduces the buying power of the
Mm-hmm.
customers at home. So I
Yeah.
do believe this is not just in China and in
Yeah.
Asia where they lose market share. Actually, the whole markets in
Home as
Europe will be
well.
also under pressure.
Yeah. Yeah.
So,
A really
so
good
from
point.
that perspective, the pressure is big. If you look at Asia, so I live in China.
Yeah.
I know China very well, but I don't have any Chinese single stock.
Mm-hmm.
Because the Chinese stock market is really difficult.
Yeah.
You have kind of it. I always say it looks like a EKG from the
Mm-hmm.
heart rate
Yeah.
measurement, up down,
Uh-huh.
up down. So it's really difficult to do this kind of dividend investment,
Yeah.
what you do outside of China. So I decided for myself I don't need to dive into all these
Mm-hmm.
systems and do that. But instead, I want to play the global South ecosystem. This
Yeah.
is super important. Um, and I also want to play China for sure.
Yeah.
China is super innovative. I really
Yeah.
have to say, I don't see any country right now in the
Yeah.
world to be able to compete with China, and that will
Mm-hmm.
continue. So from this perspective, you need to play China,
Yeah.
all these companies. And what I do is, so I have in my portfolio, as I mentioned before, I have not many positions, but they are large,
Yeah.
really high conviction. And I have two positions in China, which are ETFs.
Mm-hmm.
One is the Hang Seng Tech ETF. That's
Yeah.
kind of the China Nasdaq, if you
Mm-hmm.
wish, and also very focused.
Yeah.
The top holdings are all the China big techs. Actually, they all
Yeah.
have like 8-9%. So it's really
So we're
a
talking about
big tech.
Tencent, Alibaba, these ones. Yeah.
Exactly, BYD all in
Yeah.
there.
Yeah.
So I think that is a great play because also
Mm-hmm.
AI, actually China is
Yeah.
really also here you can see again the
Yeah.
two ecosystems. US, where all the companies invest massively, try
Yeah.
to get their subscription fees up, and China is just delivering their AI models for free into the
Yeah.
world.
Yeah.
So there will be a second ecosystem which gives a lot of pressure, so you can play that.
Mm-hmm.
But it's not a dividend paying ETF,
Yeah.
but it still for me is important to play that.
Yeah.
And then I have a second one, which is the CSI 300
Mm-hmm.
index. Basically, its ticker is 3188.HK. So
I
it's a
will
Hong
ask
Kong
you the
list.
tickers afterwards so they can put them in the show notes as well for the listeners.
And that's a broad market in China.
Mm-hmm.
Also pays a dividend. It's not too much. I think it's like 1.5% right now.
Yeah.
But this really covers China very well.
Yeah.
And both of them are also in the last 2 years up like 40-50%, you can say.
Nice.
So
Nice.
they are having really a good uptrend, a solid one. So these are two.
Yeah.
But my three big holdings in Asia are three individual companies.
Mm-hmm.
And but important is always to say, so that's not a recommendation, buy them right now, okay?
Yeah.
Because I buy anti-cyclic,
Yeah.
anti-cyclical. So when I
Yeah.
bought them, it was really cheap. Now they went up quite a bit. So I have two REITs. One REIT is in Singapore.
Mm-hmm.
This is the ticker I will tell you later. Then also
Yeah.
is a REIT running some commercial and hotel real estate in Singapore dollar. that was totally beaten down over many years, like really 10 years down. And then like, I don't know, 2 years ago, I really thought like, wow, that's a no-brainer. And then ever since it goes up, and it was really so cheap. So I have a 2-digit yield on cost there.
Nice.
Yeah, and it's a Singapore dollar one, so I really like them. Also today you can still buy it. It's still at, I think, 6.2% yield or so. And the good thing is, because this is also no withholding tax in Singapore, so all for the European investors, you don't need to struggle with that. Then I have another one, which is YTL REIT. It's a Malaysian REIT. And I used to live in Malaysia, so I know them very well. And it's a hotel REIT. Okay. It has hotels in Malaysia, in Japan, and in Australia. Yeah. So it's a nice Asian portfolio. I bought it in COVID. I mean, it was like everybody thought nobody will travel anymore. So it was really a bargain. I have it ever since, getting really juicy dividends from that, because it's also a double-digit yield. So I love that one as well. So these are two which I love. And there's a third one, which I think is really a fantastic play, also for everyone, really. And that's ticker J36.SI. So this is Jardine. Okay. I'm not sure you know Jardine, I guess. No. So it's a huge conglomerate. And what is very special, this is a conglomerate which plays actually Asia very well, because you have 60% of this portfolio is basically Southeast Asia. And within this 60%, 50% is Indonesia. Oh. And Indonesia is a country which is very difficult to play, because there's also not many investment opportunities there.
I tried it with Tupperware.
They were in Indonesia.
That's one of my mistakes I made. The CEO at the time, Ricky Goings, said he's going to empower the Indonesian women to be entrepreneurial and throw Tupperware parties everywhere. And I bought it with in mind, like, if the Germans stop, then the Indonesians. But oh my God, I fell on my mouth there.
That sounds interesting. In Asia, I would not bet on Tupperware.
No, but I did. You can imagine.
Okay, long time ago. Yeah, I think your portfolio survived.
I think so. Yeah, I think so. But I have those stupid mistakes from then. Yeah, but it shows indeed Indonesia. I think it's very difficult, and also when you look even at the map and you see Indonesia, you can see even already logistically how complicated it is to even ship stuff there, right?
Absolutely, yeah. And this company has a 50% Indonesia business, and in Indonesia is covering automotive, but also mines, so mining business, also even palm oil. So it's quite diversified. Then you have 20% Hong Kong, China, actually. So there's some like 7-Eleven stores, food stores, retail business. There's also a Mandarin hotel. So this is all Asia. And then you have 10% rest of the world. Yeah. So I love that as a super nice balance. Actually, even I see it always a bit of a peer to Berkshire Hathaway. Yeah. Because it's a conglomerate in Asia. Yeah. It's actually listed in London. So you also have no dividend withholding tax issue. It's headquartered in Hong Kong, but listed officially registered Bermuda. So it's an international company coming from the British Hong Kong, basically Asian background. So this is a fantastic company, and it was also quite beaten down. So when I bought it like a year ago, it was half price. So at that time, also the dividend yield was like more than 6%. Now it's down to, I think, 3.5%. But the earnings were good. They are making progress. I think overall it looks good. So it's still a buy. They didn't dip after the earnings also, which I thought, because they run up 100% in the last year. So I think that's for example a play how you can play Asia. There's still also a Western perspective, because it's a company with a Western heritage.
But there's Asian management. It has Asian management, right?
Yes and no. Yeah, for sure. The company is is run in
Yeah.
Asia by Asians for
Yeah.
sure, but the family behind that is still also the controlling shareholder. So this is
Okay.
still a Cashwick family. So this is
Mhm.
still kind of this Hong Kong
Yeah.
UK heritage.
Yeah.
So it's bringing
Okay.
together both worlds, I would
Yeah.
say.
Yeah. Yeah. Ah, really nice one. And so and I think you addressed with that already a little bit because there are quite some hurdles, I think, to, for instance, directly invest in China and generally in Asia. So what do you see generally as the hurdles from your own experience really investing here? Because we could talk about the V structure and everything, but what generally are for you the biggest hurdles investing?
Yeah, I think so. The first biggest hurdle is really for people, I think, just not knowing the markets.
Yeah.
If you are not traveling there, if you don't understand this ecosystem,
Hmm.
it's very difficult to get any kind of conviction for
Yeah.
any individual company. Yeah?
Yeah. Yeah.
So I understand that. So this is my advantage for sure, being
Hmm.
here. So I see how the customers, what they like,
Yeah.
which brands are there, and so on.
Yeah.
Um, Out of Europe, I would say really finding the one picks which
Yeah.
where you think, oh, that's the product which all the guys need. I don't
Yeah.
think this is realistic.
Yeah.
So I would look at that really a bit from let's say like a
ETF.
conglomerate
Hmm.
and ETF investment
Yeah.
perspective. Yeah?
Yeah. Yeah.
And so all these companies, all these countries are totally underrepresented in
Hmm.
this ETF ecosystem. Also, this
Yeah.
why on the other side, it also means you still have reasonable yields
Yeah.
because it's not just all flooded with money from
Yeah.
retail investors, right?
Yeah.
So there are still opportunities. This also reflects then
Yeah.
in the price, and this also for sure in ETFs.
Yeah.
So I think everybody, if you don't think you can find individual stocks, which I would understand, then you
Yeah.
should maybe try to handle this part through a dividend
Yeah.
ETF, and there are dividend
Yeah, there are a
ETFs.
few indeed, also with decent
Yeah,
yields, I would say.
yeah.
Yeah.
And that's not so. What you're looking for, especially these dividend aristocrat stocks, you won't find them in Asia. At
Yeah.
least not many of them. You have maybe more juicy yields, but
Yeah.
also going down when there's a crisis. So
Yeah.
this is a different
So you really need
environment,
to use
like it
a,
is.
yeah, then you would really need a margin of safety approach to this for not going underwater during a crisis.
Absolutely, yeah. But
Yeah.
this is actually also what I do for my portfolio.
Hmm.
I'm not a dividend growth
Yeah.
investor fully, let's say
Yeah.
like that. I have holdings like the Schwab
Hmm.
SCHD
Yeah.
ETF, which I consider
Yeah.
dividend aristocrats, even it's only
Yes.
10
Yeah.
years right
Dividend
now, but
growers. Yeah.
they are on the way. Yeah.
Yeah.
I also have Allianz and such
Yeah.
companies for sure, but I also really prefer having some nice yields and
Yeah.
prefer to work with a margin of safety,
Yeah.
and then I can also accept in sometimes that it goes a bit down.
Yeah.
So this is the way how you also need to work in Asia, I think.
So I'm quickly checking, right? So my portfolio, let's say, exists for 55% out of US dollars and the other 45% of euros and Danish crown, Swedish crown. So together 100%. How much would you say, like EDGI, if I were you, I would take this kind of percentage of exposure to Asia in your portfolio? I know it's not advice, but just like, guys, we are in the pub here, just having a beer. What would you tell me?
Yeah, I think what you should not do is taking out half of that and put it to Asia. Like I
No,
would
but
do a
let's say
kind
I
of a
build up over time towards that directionally, let's say.
exactly, yeah. So I would really do a kind of a dollar cost averaging thing
Hmm.
in Asia and dip into something and then build it up over
Yeah.
time. And I think it's a bit different for me for sure because I
Yeah.
live in Asia, so my
Hmm.
exposure must be higher also.
Yeah.
But I think from a investor perspective from Europe, I would say So 20% you should have at least in this
Yeah.
ecosystem. And
Yeah.
if you look forward again to where's the growth coming from, where will be the future countries which are the big markets, then this is the ecosystem where you cannot afford to have like 5%, I would say.
Yeah. Yeah.
So
Yeah.
this really need to be maybe US still big, but I
Yeah.
think 60% what you have now very often is also a bit
Yeah.
too much. I also have less,
Mhm.
to be clear. So maybe I see that more like 40, 50%. Then you have Europe tendenциally also getting a bit less because
Yeah.
the strength is also not there anymore. So Asia should get really to a nice double-digit percentage holding at least in the
Cool.
next 2, 3 years.
You're giving me lots of food for thought, and I will definitely look at some of the ETFs that you are mentioning, and just to see does it even inspire me. But I'm with you. In my annual report, I was even talking a little bit like, okay, the what if the U.S. empire is ending? Yeah, what then? What with the dollar exposure that I have? Because last year, I effectively actually had a decline in dividend income because of the dollar losing strength, and it really made me think like, am I positioned well for such a situation? And of course I'm then leaning more towards gold, maybe even a little bit, or more European exposure. But actually I haven't totally thought about another hedge, which would be Asia, because of course what could be a rising power, and we all know that China is a rising power at the moment. So yeah, thanks. Good. Some food for thought for me, I think.
Yeah. And again, it's if I say Asia, I mean especially this ecosystem. And this includes also, for example, if you look to
Mhm.
Mexico, Mexico is actually exporting 87% of their goods to US.
Yeah, yeah,
So
yeah,
that's basically the US backyard.
yeah,
And this is now in Chinese companies' hands,
yeah,
I would say. So the
yeah,
last years, this is really Chinese companies super strong there.
yeah, yeah, yeah.
Also cars, you can
Hmm.
see them shifting on the road
Yeah,
from US trucks to Chinese BYDs.
yeah, yeah, yeah,
Also South America, Brazil, all these markets. So
yeah,
it's not just Asia, even to US. This is
yeah,
all coming through the back door, basically in these ecosystems more and more. So
yeah,
I don't see this ending. Also, the tariffs couldn't have such a big impact there.
yeah. Cool, cool, cool. So we have a lot of listeners' questions. Shall we go to them, Florian?
Sure. Yeah.
Yeah. So we have actually three questions. One from Thomas, Jonas, and GRIG Wealth Management, and it's all a little bit related to the Hong Kong and the fee structure. So Thomas mentions one of the reasons for some investors avoid investing in China, Hong Kong is because they are afraid that there's a lack of corporate governance. It's more difficult to get money out of China. What if China would nationalize a company? Um, so when you hear these kinds of thoughts about the fee structure and everything as well, Hong Kong and I guess the concerns about the trustworthiness of your investments, how do you look at that from your point of view?
For sure, there is a risk, a political risk. Yeah,
Hmm.
there's no doubt. But I would argue right now you can look to US. I think in US you also have a political risk right now.
Yes.
So things are changing fast.
Yeah.
So should you go all in there? No. So
Hmm.
it's a part in the portfolio diversifying over the long run.
Yeah.
So not over the next 1 or 2 years, but we're talking about over the next 5, 10, 20,
Hmm.
30 years.
Yeah.
And here, this is a ecosystem. If already today 40% of the goods coming out there, then
Yeah.
you need to kind of make a risk assessment yourself.
Yeah.
Can you afford to take this risk? Which also means that the stocks are cheaper than other
Yeah.
ones right now because
True.
of that. So that's
Yeah.
also priced in.
Yeah.
So it's a risk reward question, and
Hmm.
from my perspective, it should be a part, but also not the biggest part for sure. So
Yeah.
again, we talk about Asia, and there are
Yeah.
many other opportunities. I would not so much Also, for sure, look at Hong Kong especially, and ETFs like there, we can play also the mainland. But I would especially also look at Singapore. There's a lot of ETFs out there where you can play Asia, which also pay a nice yield. So they are interesting for dividend investors. And then you are in this ecosystem. They're all doing business with China, so you're always linked with the China success story also through this ETFs.
Or India, as you mentioned, right?
Absolutely. But India is even more difficult. So India is super restricted for retail investors. You can't do much there. So that's why I actually don't have India ETFs or whatever. I had one for some time and I kicked it out after 2 years going nowhere because it's just also inflated there. I think the best thing you can do is in India really play that through the Western companies. If you have British American Tobacco, you have ITC in India, right? So also Unilever, they all have something there, and they are also super well positioned. So I think that's good enough for India.
Yeah, awesome. Then a question from Ryan: do you feel that there is a sort of extra barrier when it comes to understanding a company in Asia compared to a Western company due to the big difference in culture? I think we spoke a little bit about that, about the conviction here, right? So, and what's, for instance, a company in China, if you could invest in it, that you would love because, for instance, you see the products, you see the take up and such. Is there anything that comes to mind?
So I'm actually always looking a little bit more on kind of B2B companies. I'm not very heavily invested in B2C businesses because I'm also an engineer all my life. I spent in a B2B. So I think all companies which are related to Chinese technology are fantastic investments over the long run. They're sometimes too expensive, but without naming now a specific one, but China is leading innovation. It's really amazing. I see that every day. Also what you see now, for example, in the field of robotic, that's like just blowing you away if you see that. And this is like already 10 years ahead of the next one. So these are companies.
Scary.
And that's why also like being invested in a tech ETF, for example, through Hong Kong makes sense because you are kind of playing this ecosystem there.
Yeah, awesome. Wayne has a has a question whether corruption play a part in the mindset of Chinese investing.
I think nothing. There is no concern about this. I think you could also see in especially in China. I mean, there was corruption there like 15 years ago, yes, but that's really massive campaigns were made to stop that. So I don't see any issue related to that. Yeah.
Okay. Good. Then from Todd McKay, and he has it's quite a long question, and we touched already a bit on Starbucks and Apple, and then Manulife, Sun Life in Canada, and such. And he is saying like, is there enough room for both incumbent Asian companies and Western companies to thrive in the same markets? It's great to see my dividends growing and citing Asia as the reason for the continued growth, but at what point does the party stop? And when I understand you a little bit, the party stopped already, right? At least for the Western ones.
I think so. Yeah, for most of the companies, it really has stopped. There are some exceptions. I'm really surprised about Apple every year again. So I mean, I'm also an Apple guy. I think I don't know how many devices from Apple. It's just a fantastic phone, especially in China also. And you see young people really still buying iPhones like crazy. So this is there. I think it will not go up much. I think it has more the potential to go down, but very slowly. So I don't see major interruptions there. And actually, for example, Apple is also super well positioned in India to win there. So this is all what you can play through the Western company in this case. But other than that, especially B2C companies, I think the party is really over. And you will see that in the earnings pressure over the next years. The Chinese brands are just growing faster.
Yeah, that's really, really fascinating what you're saying. And then a question from Gian. He's asking, like, and this is more of a fun question, I guess. Who will be dominating the gaming industry? Xbox seems to lose ground. Will Sony or Nintendo take over? Or is there a third party? Maybe Tencent from China?
So the last time I was playing computer games was Indiana Jones 4, I think 30 years ago. So I'm not
Yeah.
an expert on this topic. So sorry for that. But maybe Tencent is, I think, even the biggest gaming company in Asia.
Yeah.
And you could see there, so Asians are digital natives,
Yeah.
having their phone in their hand really 20 hours per day, right?
They're
Some
living the
even when they sleep.
simulation.
Yes. So I think that the game market will be always huge here.
Yeah.
But who will win it? Don't ask me.
Yeah. No,
Find
no.
another
Fair enough. Fair enough.
person. Yeah.
Then a question from Trevor, and he's asking about your investment time horizon with relevance on geopolitics and currency fluctuations. And do you think the RMB is under or overvalued?
So my investment perspective is for sure long term because I need to live from my income. But I'm not the kind of this buy and hold investor like you
Hmm.
are,
Yeah.
for example. I'm not this person. I really look at sectors. I look at trends very carefully
Hmm.
and then decide if I shift from sectors. I'm not so much looking into individual holdings. Is the
Yeah.
thesis there or not? So I'm for sure this is sometimes also a reason to change something, but
Hmm.
most of the time it's some sectors. Like for example, I did because I just saw the markets are too expensive.
Yeah.
So I really shifted like 20% from my listed portfolio into investment grade bonds
Yeah.
because I see right now you have in US you have like 4.5% risk-free
Hmm.
uh, uh, yield,
Yeah.
and at the same time you can wait and see if there are opportunities coming up in certain sectors, and you
Yeah.
could see that, for example, the software sector,
Yeah.
all of a sudden massive pressure, fantastic.
Exactly.
So Walter's Kluwer, I think we
Yeah.
both are bullish on them, so I
Yeah.
really got quite a good position there. So
Yeah.
these are the opportunities I'm looking for.
Hmm.
This was like British American tobacco when it was beaten
Oh,
down,
yeah.
COVID with
Yeah.
hotel rates,
Yeah.
then I buy this stuff. So I'm more like looking for
More a little bit
is
more,
something changing?
more a little bit
Yeah.
leaning towards value, I would say. Value, but with proper cash flow coming to your wallet.
Absolutely. Yeah.
Yeah.
And this always really played out well because if something runs up, then
Yeah.
it's getting too expensive. I'm really cutting sometimes half and
Yeah.
reinvesting it in something with higher yield. It's a little bit like SCHD is actually also doing
It's their
through
strategy. Yeah.
algorithms.
Yeah.
And I think that really works well because
Yeah.
you
Yeah.
get your yield up
Yeah.
systematically. So
Yeah.
that's my
I've
style.
actually done that with Apple. I sold 2/3 of my position last year just because I couldn't see them continuing at a 40 multiple for so long. Yeah, good.
Absolutely.
Dividend Gartner is asking about your thoughts about investment trusts that have track records of yearly dividend growth. Is this at least is this the least risky option for dividend growth investors to invest in Asia? For instance, Aberdeen Asia Income Fund, Fidelity China Special Situations, and Henderson Far East Income. I don't know if you're familiar with them.
Yes, not all about them. I think they can play a role, yeah.
Hmm.
Um, However, for me, it's still like maybe because bit understanding the market better.
Yeah,
Like for example, I have some reads. I could look at the prices. I can say now is
yeah,
reasonable, and then you get some really fantastic reels. And what I love is they are small.
yeah,
Like my YTL read has like 15 hotels or so, and
yeah,
I have slept in half of them. So I know these really
yeah,
well. Also,
yeah,
the Singapore REIT, I know Singapore very well. I used to
yeah,
live in Malaysia and Singapore, so I know all these
hmm,
facilities, the hotel at
yeah,
the airport, the office
yeah,
places. So then you have a sense for it. Then you
yeah,
know what's the value, and you can really feel safe. So
yeah,
this is kind of how I do it.
yeah,
But these funds, I think they also play a role
yeah.
for ones who cannot do that.
Awesome. So Adrian had a question about Asian ETFs, but I think we discussed that already. He also asked about And I don't know if you know any of them, but what top Japanese stocks you would recommend and why? Are you familiar with the Japanese market as well?
Um, I know Japan also very well. Traveled there very often.
Yeah.
However, I'm not invested in Japanese
Mm-hmm.
stocks right now directly. So I
Yeah.
have ETFs which have Japanese stocks. Somehow I see also Japan stagnating for a long
Yeah.
time. So this is I see how the Japanese OEMs really get under massive pressure
Yeah.
in China, also in Southeast Asia. So I see more the pressure on Japan right now more
Yeah.
than the chances. So that's why I don't see the need to invest in a
Mm-hmm.
market which does not benefit from all these Asia ecosystem.
Yeah.
And at the same time, it's not a market where I'm every day at home. I also
Mm-hmm.
don't buy too many Japanese products, so I stay a bit far away.
Yeah.
And I have also Berkshire Hathaway, so Warren Buffett. They know how to play these markets, right? He also
Exactly.
bought a good position there, so no need for
Yeah.
me to struggle.
Cool, cool. And I think this answered also the question from Maro Su, which was also about Japan and India. And I think we discussed that enough during the podcast. You, by the way, brought one stock to my mind is AFLAG, for instance, the American insurance company that gets most of the business from Japan, which has been a very, very good dividend growth stock over the last few years. Then the last question from Philip is, what's yours and Florian's opinion about geopolitical situation in Asia, specifically Taiwan and China? And given those are mostly developing countries, how stable are the laws, governments there? And yeah, so and anything around Taiwan you would like to discuss here?
Yeah, I mean, you see the same like what is happening right now in Iran. I
Yeah,
think it doesn't really matter where it is
yeah,
and who is involved. It's always impact, and
yeah,
for sure Taiwan because of the TSMC
yeah,
exposure is. I always say it's the emergency off switch of
yeah,
US right now. So
exactly.
from this perspective, it really would have a big impact. But
Yeah,
I think you just again need to look at your portfolio, how you can hedge these risks.
yeah,
I think there are some investments like I have Intel, for
yeah,
example, in my portfolio. Not so much because I'm convinced what they're doing today,
yeah,
but in case there is a disruption, I would say
yeah,
who can build these chips in US
yeah,
or in Malaysia. Actually,
yeah,
Malaysia is also a big hub,
yeah,
and then I see them there
yeah,
positioned well. So this
yeah,
could be maybe right now go nowhere or go down, but
yeah.
in case there's a conflict, it could maybe potentially
Be
really
an hedge.
spike up. Yeah.
Yeah.
But on the other side, I also have to say I would be not too scared about this.
Mm-hmm.
I think also for me, my best advisor in my career, investing career, was not being scared of
Yeah,
anything
yeah,
because
yeah,
I'm always invested, and I do believe markets switch, they adapt to whatever happens. And in the end of the day, it will be there will be not a dramatic
mm-hmm.
impact to the world, whatever happens. So I think no need to be scared of anything right now. Just
Good,
make
good.
sure you play Asia and this Chinese ecosystem
Yeah.
because that's the bigger risk.
So that is actually the second part of his question. So if we don't want to be scared, his question is actually, what is your opinion about crypto and stablecoin adoption in Asia?
I mean, in China, crypto is forbidden, so
Okay.
this is not allowed. So there
Yeah.
is no ecosystem
Yeah.
in China for Bitcoin. So I had my time where I had 80% of my wealth in Bitcoin. So I really Bitcoin was the best investment in my life
Yeah.
in three cycles.
Yeah.
So I played that for some time. Right now my exposure is rather small.
Yeah.
So my target allocation is always maximum 5% of the portfolio.
Yeah.
But I don't want to elaborate on this here because it doesn't pay dividends, right?
Yeah.
And I think in Asia there is not a big crypto
Mm-hmm.
ecosystem right
Yeah.
now. I don't see it so important. So as a dividend investor, I think you can make a good portfolio even without that exposure.
Awesome. So Floria, we went through all the questions. We spoke a lot about Asia. And my last question then for you, is there any stock pick or stock or ETF that you would say, like, guys, you got to look into this? I know you discussed already a few, so maybe if it's one of those, but if you think about today, what would you be looking at?
So first of all, I would say everybody maybe could look at Jardine. I
Yeah.
think this is a typical good kind of stock where you
Hmm.
can play the market without having a super small niche
Yeah.
somewhere. So this I really can recommend. It's a bit expensive right now, but I'm
Yeah.
also sure there will be opportunities coming up.
Hmm.
And second, I would not say there's any stock right now which I
Yeah.
would recommend, but I can recommend one thing. Whoever can do it, get in the airplane, go to Asia.
Hmm.
Do your holiday in Asia.
Stock safari.
You
Yeah.
can get a good price. Even China has no visa.
Yeah.
Come to China, it will blow your mind.
Hmm.
Just come here. Many countries have no visa. Go to Asia, whatever.
Yeah.
Just go there, make a holiday there, and this will change
Yeah.
your life because you will see everything from a different angle and you will realize, oh my god, how could I miss that out? So whoever didn't do that, just do it. This is a good investment in
I
the
like
future.
that. There are a few other fellow world citizens living there, a few billion, I would say. So it maybe wise to check it out for one time. Awesome.
Yeah.
Florian, thank you so much. I mean, for me, it means like probably re-listening to this podcast and make some notes as well. You've got a wealth of knowledge from your personal experience and investing. So thank you so much for joining us. It's been a pleasure. Really great.
I thank you. And I have to say, I'm listening to your podcast actually pretty much from the beginning, and I'm always inspired about what you guys are doing. So I have to thank you, actually.
Thank you. Thank you. Thank you. Thank you. Well, guys, I hope also for you that are listening that you enjoyed this podcast. It was a topic that is a bit out of my circle of competence, but I'm really glad that we have Florian on. I think he brought a lot of knowledge to the podcast. And yeah, enjoy the listen. If you're running still at this point in time, we're at 1 hour and almost 6 to 10 minutes now, so that will be a long run. Enjoy the last meters, and yeah, enjoy the weekend when you're listening to this.